Hey guys, Mike here. So, oh boy, what a red day in the market, and I was kind of glad I was out with my son all day celebrating his birthday and stuff, and away from the computer, and just kind of disconnected from it all, or whatever, until I got back around 3 o'clock here and getting this video ready for you, and then we're heading back out again. So, but if you didn't hear, obviously, Fitch, you see right here, downgraded the U.S. credit rating to AA plus from AAA. And you can see there's not a lot of countries with AAA ratings anymore. So just keep that in mind. And a lot of people didn't really care about this downgrade because it's really Moody's you want to really worry about. But let me tell you something. We're going to get into all about that downgrade. We're going to talk about some of the stocks, some that were green today. And I tell you, always pay attention. When you get these big red days, what is green? What has strength to it, okay? I won't go into that. But if do you really think, please put in the comments, do you think this was a coincidence that they waited until last night to put this out about this downgrade? They didn't do it in June, right? They didn't do it in May. They didn't even do it in July, right? When the market's running up. Now, what do? They wait until just the right circumstance to kind of like, as things are kind of teetering, as I've showed you how overstretched stocks are and the fear and greed indexes and stuff. I mean, stuff like this. Look at this right here. Look at this. And I've told you about this smart money, dumb money indicator where you got, dumb money just piling in. It's never been this overstretched before, to be honest with you. Smart monies is not actually piling into the market. And when you see this big divergence, usually there is some kind of sell-off of some kind. And then we talked about, I put this in the morning news brief every day, these fear and greed indexes. I said these two are finally aligned, both of them in extreme greed. I said when they get aligned, something's going to happen. When you get up in these numbers to extreme fear, up between 75, 85, something's going to happen. And of course, what else? Showed you this right here, the seasonality of it. When's the VIX spike? August, right? That's when you get a spike, and it comes down, and it spikes between like September, October-ish, and then look at the very end of the year. Make sure you look at the year and the end of the year on this, okay? QQQ, what happens? This is usually weakness of seasonality, right? August, even some in September. You got the IWM, looks even weaker in August than the Qs do. And then, of course, I've showed you the stocks. Like I showed you Meta yesterday. Hadn't even touched its 50 the entire year. All these indexes and everything overstretched to the hill. All these stocks that have just gone up astronomically and stuff, okay? And so is it a coincidence they release this now? No. No, it is not, right? And this is where I wish they would launch invest. It would be automatic that they have to. And I don't mind downgrades, but and maybe I'm obviously just a skeptic, behind closed doors, somebody was shorting the brakes off this. They knew this was coming, right? So when I always say this, when you want to work for a rating agency, you have to be an open book with your investments, right? And so I want to see all the open books. I want to see all the books saying who's in some shorts here or who sold before they put this out. Because that's what happened. There's no doubt about it. Right? They wait till this timing to do this. They didn't want to do it 2 weeks ago. They didn't want to do it a month ago, 2 months ago. No, right? So they put it out now. And so, and if you believe it wasn't a coincidence, I got a bridge in Florida I need to sell you. So, anyway, let me know what you think about that in the comments and stuff. But, what else come out today? ADP. And once again, strong job market. This is the one that usually shows like a huge separation from what was projected. And they say another 324,000 people got hired versus I think it was like 190 was actually supposed to be the estimate. And you can see these will be downgraded. Every one of these have been pushed down lower than what they were. I mean, it was 497,000 last month. But again, it still shows people are still getting hired, still getting jobs. Even if it's just part-time, keep that in mind. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And one thing to keep in mind as we go through this, if you notice, I know PayPal's getting hit in after hours and stuff. Notice how the market is actually reacting to earnings, right? You got if you put some of these earnings that have come out this week and these were last quarter, the stock will probably be up 10%. Like each one of those stocks be up 10%. But now, I told you, when you're running way up into earnings, you better hang the moon. Okay, don't matter if you do a double beat or not. Don't matter if you even got up, right? They sell you off. Why do they sell you off? Because you ran up so much. Plus, it gives them a way to get into a position, right, at a cheaper price now. If they've ran it up so much, right? And so that's why I said it's not about what the earnings are going to say. It's how the market, big money, is going to accept the earnings and what they're going to do to react. So if you're wondering about that, because you'll see it going through here. But you can see today, I mean, it was just really all the sectors that have been run up big got crushed. What do you see at the bottom? The best performing. Utilities were flat. Healthcare was actually green, right? So keep that in mind for the next week to see if defensives actually perform better than the rest of them. Now, some of these are going to be holding on for dear life, okay? The SPY sitting there tomorrow, it's going to test that 21-day moving average. Hadn't hit it since May. And so, again, it's right in the middle. We talked about that trend line right there. And you see it's in that gap right there on the daily. So it does have room to drop even more if this selling pressure continues, right? And you can see right there, so that put it down another, like, I don't know, 3% or whatever. If it drops below that, it goes into the next volume gap, so keep that in mind. And again, as we talked about, I mean, you've had this divergence on the RSI since June. You know, I said it can take a while. It may not play out at all, but now maybe it's finally starting to play out. Healthy pullback. We'll see if it turns into something more. IWM, once again, that trend line, you know, there's always the big talk. Is it finally going to get its breakout? Is it finally going to get its breakout? And now it's come back down to that volume gap. So it better start holding on up there as well. And it better not break that 21-day moving average. I'm telling you right now, because you can see what happens. When it breaks it, it usually comes up, retests it, and then sells off quite a bit. So just keep that in mind. Again, we'll just have to see if the selling pressure continues or not. But this one still just cannot stay above that trend line. And I'll show you the seasonality of it. So we are in a weak time for it if this continues. Qs finally broke below that trend line. The 21 EMA actually saved it, by the way. And you can see right here, last time it bounced was in May. And so, you know, we're going to be watching certain levels on this one. I mean, if we go to the weekly time frame, you can see right there, it's in that volume gap. So, you know, we could come down 368-ish, somewhere in that area. So just keep that in mind as well. But watch that 21 EMA and see if it actually holds up tomorrow. And one that was still green today, that's been on a nice run, is Uber, right? I mean, Uber has been green. It's been moving up since April, right? Just steady 80. Just kind of stair-stepping its way up, right? I need to put a trend line in there anyway for it to have been bouncing off of. But you can see right there, if it gets above that volume node, this could continue to run. And the reason why is because they finally reported their first, you know, GAAP operating profit, right? It's been like forever. I mean, you can see they've been getting close to it. And so the market loves it when they hear that kind of stuff and they see the economy so far is holding up and everything, and people are using their Uber. So just keep that in mind. Now, AMD was up in after hours last night and it got hit hard today. And you can see obviously huge red candle, rejected off that trend line, which gives me my third touch on that one. Again, wait for the third touch on this trend line coming up, which will put it around that 104, 105 area. Again, it's below the 50 now. It's below that trend line. It's below that 110 area, even though when you look on the shorter time frame, you can see dip buyers were definitely coming in when it hit 107, pushing it back up to around the 110. It dropped below it again. And so we'll see if dip buyers roll in tomorrow and do it. And when I was looking at the earnings last night, I don't know about you, but I was sitting there going, definitely not an NVIDIA earnings. I mean, revenue down 18% year over year. Gross margin was okay. Operating margin was garbage. You know, non-GAAP EPS, I mean, it was okay. Even the guidance wasn't even that great. And I must have said, wow, they must have said this. I said this in Discord. They must have said AI 100 times. And I was actually wrong. It was only 62 times they said AI. And of course, it got those algos to kick in and everything. And I got this other channel I put in there to show, you know, the income statement and stuff on this. To me, this is the easiest way to read it. And they're at 5.4 billion, but obviously, you know, NVIDIA did this huge markup on what they're going to be doing in revenue this quarter, and AMD did not. And so this is one of those things I was saying. You're going to have stocks that, you know, they seem AI, and I guess they'll get it, and maybe they eventually will. But even they're saying it's going to take time, right, for this to happen for them, right? Right now, NVIDIA does seem to have the picks and shovels, and AMD second. Hopefully, we'll see if people start buying their chips a lot more. But again, you know, just keep an eye on that. Now, Tesla, obviously, what saved it was the 50-day moving average for this one. When you go to a shorter time frame, you can see it broke down below that level we talked about. It did not need to break down below, which is 254. Dip buyers ran in there real quick, tried to push it up. It did close slightly below that today. And that's going to put, you know, if it continues this downward pressure, then there's going to be a lot more room to go down here. And you can see, I mean, there's plenty of gaps to be filled. There's actually, if it breaks that volume node there and goes into that gap right there, that's what I was saying. You can see this thing drop fast just because of the way Tesla does move. And so we'll see. I mean, again, if the dip buyers, you know, come in and save it, then they come in and save it. We'll say one thing, though. Tesla, if you're looking for a used Tesla, man, I mean, goodness, you can get one for 42,785 now. I mean, they're way down. Don't exactly feel good for the folks that bought way up there, because if they try to trade their Tesla in now, they're going to get absolutely crushed. But if you're looking to buy one, maybe now's the time. Who knows? Maybe it'll be cheaper in another 6 months. You never know. Now, obviously, Chinese stocks got absolutely crushed. NIO actually held up decent, believe it or not. I didn't see any news about NIO, but they were actually green at one point in time of the day, and Lee was actually green. And, one thing to understand about this one, the seasonality in this one, right? Seasonality is bad the first part of August, and then it starts to rip, and then pretty much for the rest of the year, it's supposed to be positive. But again, the manufacturing data out of China is garbage. Their economic data is garbage. They just keep trying to do this stimulus and asking banks to lend to people, and they do all kinds of stuff that I've never seen before. So we'll see how this stimulus stuff works out over there. That's really what the market seems to care more than anything about. So again, we'll see. Now tomorrow you're going to have like Wayfair, Warner Brothers, Expedia, Moderna, Hasbro. Then you're going to have the big boys, Amazon, Apple in the afternoon, Coinbase, Block, Airbnb, DraftKings, let me take a breath, Fortnite, Wish, and Cloudflare reporting. And then when we go into economic news, you will absolutely have a ton of jobs data coming out tomorrow. So we'll see if the markets will react to this or not. Continuous jobless claims, initial jobless claims, S&P Composite Global PMI, S&P Global Services PMI, factory orders, ISM Services business activity, employment, new orders. That's pretty big. We'll get to see if this is recovering or not. And so we'll see if we're going to get a bounce tomorrow after this big sell-off today and stuff. It usually tends to be the case, but that's something to watch out for. When's the dip by crowd stop coming in? Do they stop coming in, right? And so that's what we're going to have to make out. I kind of thought was, that the market was waiting on Amazon and Apple. It seemed like they were kind of waiting to see what happened there. But this credit downgrade obviously just gave them an excuse to push the market down. It needed to be pushed down. That's the way it is. I mean, we've been talking about that for weeks now. And so finally you're starting to see that. And so as I say, get your list ready, have your price target set, all that good stuff. And so, we'll see what happens. But again, no coincidence that rating, that credit downgrade happened. And if Moody's does it, that's a whole different ballgame, by the way. And you hear people talk about 2011. There was something else going on in 2011 also at that point in time, because that's when Fitch actually did their last downgrade and the market sold off. And could that happen? Absolutely could happen. The big money could use that as an excuse, because the one thing you can't predict, and that's what I keep telling people about, you get these channels that all they do is talk, good stuff, and don't tell you anything to watch out for. But, look, I'll show this probably tomorrow, I think is what I'll do. This channel, it's a private channel I just did for myself that I added into our Discord. Only I can see it, but it's notes for my son, right? And I put one in there today that I found, and I put it in there for him to read in the future, right? So he knows and be able to have an example. Say, oh, now I know what you're talking about with the market's not the economy, and the market goes on these crazy runs, and this happens and that happens. And, why not document one of the craziest times in history, right? For your son to read about when he gets older. But I'll show it to you. And it really, you just look at it and go, okay, I get you, and so we'll go on more of that tomorrow. So anyway, got to get to dinner with my son and stuff. So hope you got some out of it. Hit the like and subscribe button if you did, guys, and put me a prediction down at the bottom, green or red tomorrow. Let me know. All right. See you later.